Hello there, this is Daily Wrap-Up. I'm Edison Yasharan for a Money Move. U.S. equities finished the day higher as investors assess the start of the earnings season and the future rates hikes from the Fed. The 10-year Treasury yield landed near 2.95% after briefly touched 3%, with investors continuing to see strong tightening from the Fed this year. Oil was down about 5% but still above $100 a barrel. European and Asian shares were lower as the Ukrainian conflict drags on. The US dollar has had a strong move higher against the yen but slightly weaker against the euro. All eyes on the Fed and earnings. Stocks have edged lower this year as multiple headwinds mounted, namely a global monetary policy shift led by the Fed from an accommodative stance to a tightening stance as inflation rages. Investor sentiment has soured even as the labor market makes a strong recovery. Consumers continue to drive growth, and corporate balance sheets came into the year in the position of relative strength. However, the earnings season has been strong so far, with many companies beating guidance and posting upbeat future expectations. Earnings will be a key factor for the stock market this year as liquidity is reduced and multiple compression continues. Food and energy costs rise. Grocery prices rose 1.5% in March over February and 10% over the same time last year, and the 12-month growth is the largest growth in food prices in over 31 years, according to the Bureau of Labor and Statistics. Natural gas, which has seen volatile price action over the last few months, remains high even as it loses 7% today. Ukraine and Russia are the two of the world's largest grain producers, accounting for almost 30% of the world's wheat exports. The supply has largely dried up as Ukraine focuses on its defense against Russia. Food and energy have been major contributors to the high inflation ratings seen in recent weeks. In fact, if you strip out food and energy, the latest CPI rating came in at 6.2%, the lowest monthly growth since September 2021.